Hello, traders. It's 8:04 a.m. Chicago time on Wednesday, the 27th of January, 2021. It is Fed Day today. That's a very important event. This is episode number 1925. I'm aware that Google Cloud went down they have some issue that's impacting YouTube Live Chat, Gmail, and several other services. Google Hangouts, and so on. So the connection today may or may not be intermittent. I'm not sure. Anyway, I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Let's dive right into the pre-market summary sheet from Convergent Trading. Clearly risk off today. Seeing the board today painted red on the indices. The leader on the downside today is the DAX. The DAX is off 2.26% or 314 points. That's quite significant. Euro stocks off 2.15% currently. Yes, those numbers are different than the ones you see on your screen here because I'm looking at the live feed versus this having been posted at 7:50 Central or about 15 minutes ago. The Russell's down 1.9 or 2.03%, down 43.5 points. The S&P is off 39 points or 1%. The Dow off 311 points or 1%. The Nasdaq's off 94 points, 0.7%, holding up pretty well actually relative to the others. But what's interesting is that gold is off. Gold, silver, and copper are off as well, with the U.S. dollar gaining the most today, up 0.45%, trading up 39 cents or trading at $90.54 even. The bonds, the Treasury, the 10-year notes, and the Bund are up as expected. So just a flush all around. The range overnight is relatively wide in the S&Ps, 38.53 down to 37.91 at 62 points of range, which is wider than what we expect. Remember, the one sigma of range going back 252 sessions, which is 1 year, is 52.5. And we're at 62, so we're outside of what we would call normal. Again, one standard deviation of the overnight range. The market is in a trend down. It's building a distribution at the bottom and the top. We'll go over that in a minute. Volume currently 366,000, quite heavy, still within what we would consider to be normal, but relatively heavy against prior sessions. So, the mode is 370, but that includes some incredibly heavy days last year, this time last year as a result of the pandemic. So, 366,000 is quite heavy. So there's quite a bit of activity here for today. So this is likely to continue to push into the day session trade. What are the key elements today? The Fed is expected to hold, and we have several key releases before market. We had AT&T, symbol T, coming in at 75 cents versus 73 cents EPS, and revenue 45.691 billion versus 44.55. Boeing, which had a lot to deal with last year with its 737 MAX problems, lost $4.21 versus an estimated loss of $1.80. That's 133 or 134% surprise. The revenue number is higher, surprised by up 2%, 15 billion. After the market today, we get Tesla, TSLA, expecting $1.01. And revenues 10.32 billion. Apple also announces after the market expecting $1.41, 103.28 billion in revenue. And Facebook expected at $3.22 a share at 26.43 billion in revenue. So those are the big plays coming up today. Other than that, we do have the crude oil inventories. We had durable goods this morning, came in at 0.2. Consensus was 0.8. So that was a miss. And the GfK consumer confidence out of Germany came in pretty big miss, negative 15.6, and that's reflected right here in the DAX and the Euro stocks. Pretty bad miss there, negative 15.6 versus a forecast at negative 7.1. Doubled the forecast negative number. The Fed rate decision at 2 p.m. and the Fed press conference at 2:30. Again, the Fed's expected to hold. A lot to contend with today. Let's move right in. Let's just dive head in to the review segment. Yesterday, the primary scenario, we were opening up in a gap. I expected it to leave a gap zone as to play along with the overall trend and the fact that it was opening higher than the prior range. The expectation is to leave a gap zone, chop around in the morning, and then start working its way towards 38.78. That did not happen at all. What did happen is that the market pushed higher right off the open. It put in a double top in real time, and then I expected it to come back to the prior point of control, 38.48, and all the way down to 38.45 and hold at 38.45 and just go sideways. That was the scenario that I expected to play out. Again, the basis for that is a test down the day before. On Monday, a clear auction to the lows and a rejection of those prices. Before closing above 45, and that to me looked like, from an auction perspective, it looked like a very clear and very precise and efficient test of the 37.94 MC point of control. It went as far as 88, and to come all the way back and finish here led me to believe I have to go with the trend, and that would bring us to the next key area up. That did not happen. We ended up putting in a higher high, higher low, migrating our point of control a little bit higher, but overall holding sideways. 38.40 was formidable yesterday. A lot happened there. If you're watching order flow, that was a big one to watch, and therefore it gets a stock zone for today. Let me turn off the stock zone since they're forward looking and we're in a review period. Here it is. We pushed to 62.25. There's actually a small double top up here on the 4-tick Renko, and then we come back into the range and go right back to where the point of control, 38.48. We tag the 48 beautifully to the tick, come right back out to the mid VWAP, push through by a little bit, and then we continue our trip down to the 45, which was the next key area, giving us a clear and bona fide impulse down. Then we pull back, and then we continue, and then from there it's just chop, 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 chop. The initial balance is in. We extend the initial balance to 40, but holy cow, there was a lot that traded at that 40 right there. Let me get the profile going. That is a weak low. Look at that, 4,420 traded at that low. This is a very weak low, a clear double bottom. There was an iceberg that was absorbed initially around 3,500 contracts, and then on the retest, on the close, it retested just a few minutes before the close, and it got hit again with another 600-700, and it just held steady, and then from there, the market basically rebalanced, the positions rebalanced to the upside. So we ended up back at the prior week's higher, an all-time high of 38.5375, and closing right on top of the point of control. So we shifted the point of control up with a super weak low on a relatively boxy kind of not nondescript profile. We did respond instead of pulling back and pushing higher. We did respond, and again, the market showed weakness. The delta really selling off on this retest, and participating aggressor participation was to the short side into that 40 area. That 40 area becomes a key area to watch. And here's what carried us over, what happened into the overnight session. Again, this is a 30-minute chart. We open, we attempt to push higher, come back down, and we fall right off. I left a lot of notes in the Head Trader channel at Convergent last night saying that the new all-time high today, we made a new all-time high today, but mostly responsive back to 38.41 MCV that MCV or the MC point of control, or the most traded price in this region, starts on the 20th of January to present. 38.40 has been rock solid today with persistent iceberg bids that absorbed all aggression. ES closed higher than yesterday's close. Looking at the overall action today, there was a lot of action in the 45 to 48 area, with buying drying off at 54, which was around the prior week high. But at 40, the iceberg buyer area, ES is now below that, and we need to watch. So the market had already started slipping through when I was doing my homework, which was right here. It had already slipped through this 38.40 area, and I mentioned here, if we find ourselves back above the 40 tomorrow morning, meaning now, then we are likely to continue to blast those shorts for a push to 38.79 before the next fall. Otherwise, if we find ourselves opening below today's range, meaning the range that 40, then today would likely act as a resistance zipper on a bigger time frame between 40 and 45. This becomes a resistance area right in here. Again, I'm reading right off of my homework update last night. This would be a pretty strong area to fight to regain after a push lower. This gives the sellers the upper hand, and it sure did. As the Europeans opened, the European markets opened, it just precipitated into selling. And what we have in the overnight session is one distribution which lives under the 40 and gets carried down into the prior week's close. So between 38.33 and 40, we have one distribution, and then we have this low volume zone, which was represented by this trend, and then we have a second distribution, which is in between the 38.09. If you recall, the 38.09 was a high volume node, 38.09, and the low of the day, which was 37.91, with the MC point of control at 94 and the overnight point of control at 38.01. Wow, that is a lot to take in. I know, but our job here, if you recall, is to follow the story. We are simply Sherlock Holmes, if you will, and we are just looking at the clues in the past so we can help predict where the criminal will strike next. That's basically our job. And so what I just laid out for you is the context and the play-by-play of what has occurred yesterday. And yes, anybody and everybody can pull up a chart and read what has happened. That is not the intent here. The intent here is to find ourselves in alignment with the next wave or with the flow of the market, right? So that is the goal of what we're looking to do here today. So given what we have here, unless we see responsive buying off the open, then we are likely to test the next key area we left behind, which was last week's low, and we start to work our way down into 37.20 below and into the 36.90 handle. So This is really, there's some heavy lifting that's got to be done by the buyers today. Otherwise, um, we're going to see some selling continue to come in across the entire index or equity or risk complex, meaning money is likely to shift from risk assets back into safety assets, treasuries, currencies, things like that. And we're likely to see that precipitate. Why? Because of FOMC, so that's a catalyst, that's one catalyst. And because as we push higher, we see delta participation is poorer and poorer. So we're seeing aggressors backing off. And in that situation, the sellers are likely to come in because it's human. It's a human reaction, right? Market's not going up. I'm holding a long position. What am I going to do? I'm gonna clear it off at least partially, or I'm going to go into options and hedge it or whatever. And if I'm hedging it in options, then if I'm buying puts, somebody's selling me those puts, and somebody's got to establish a short position to hedge that. And so they're helping push the market down. The market is really almost like a living organism, where if you impact one thing, it has it leaves systemic footprints. Anyway, enough with the philosophy. Here's what we are looking at in the overall picture. Look at where we're opening. Look at this. This is where we are. This is the last print in real time. Well, as real time as YouTube allows. We're trading at the century figure, and recall that the overnight inventory is at negative 91, meaning 91% of the volume is short relative to yesterday's closing print. So we have a strong short inventory. We are back in the rejection zone, this wick that we left behind on Monday, a very clean V bottom. Very clean V bottom on Monday, and now we are trading into the wick of that V bottom. And this is not good for long. So this is likely to have us, we're likely to watch this, watch aggressive sellers to come in and squeeze this below the 3770 area and start to tackle and clean up some of the areas below. So this is the overall idea. If I extend this, if I look at the break and run, and I include the current, again, you could see there's a very prominent balance right here. But it's not as much. It's not as much activity as this. This is the big balance area. The most traded price in the area is 36.94. That becomes the big long-range target that we would go for on the short side, and that would bring us into balance. Okay, and then from there, the market's got to decide: do we want to stay inside of this balance zone, or do we break below it? That puts us below 36.24, 23, and if that happens, then we are likely to sell off to 35.48. I'm not advocating the short side here. I'm not a bear. Don't get me wrong, but it's setting up this way. I posted this yesterday, this GIF yesterday on my Twitter feed. It is a favorite quote from Sun Tzu. Very, very, very important and very, very apt for trading, and I wanted to bring your attention to it. If you know the enemy and know yourself, you need not fear the result of 100 battles. If you know yourself but not the enemy, for every victory gained, you will suffer a defeat. If you know neither enemy nor defeat nor yourself, then you will suffer continuous defeat. But that first portion, if you know the enemy. If you know the enemy and know yourself, then you will do well over 100 battles. And that's what I've been advocating for and pushing for all traders to understand, that our goal is not to avoid losses. Our goal is to survive and be here for the next battle and to push as to push our edge, because we know our edge, we know ourselves. And if we don't know our edge, we don't know ourselves, then that's where our work is focused. That's what it takes to trade right. But at the end of the day, it is not just one thing that's likely to make or break you. It's not just one trade. It is, as long as you know what your edge is and you know what to look for, your goal is to be here and survive enough to fight 100 battles so you can vanquish your enemy, whatever that is. You can define your enemy as your hang-ups, the market, whatever. I don't feel the market's an enemy. I feel the market is just a force of nature. Here's what we've got for today. Let's turn on the stock zones. A lot going on in this area. Of course, with the MC point of control, we're above it. The expectation this morning, we're opening up in a gap, big gap here, big gap, not likely to fill, but we've seen these things. We've seen these things fill in the past, but this morning I expect an open auction out of range. I expect responsive buying, and I'm looking for the responsive buying to really struggle in this 22 area right here. I'm expecting that to be the extent, the limit of any move up. It may turn sooner, right? It may turn anywhere. But if we have responsive selling, then I'm open for it to come all the way back to 38.22. If it gets to 38.22, then I'm looking to get short aggressive on a structured trade with a fixed stop there. And I'm looking for the impulse down, looking for it to migrate back to the overnight point of control and potentially test this low at 37.91 and take out this 88 from the other day, which we have not taken out in the overnight session. Consolidate down here before the FOMC kicks in, and then from there, I don't think the market has high expectations, so I'm not expecting the market to move all that much. But from here, chances are it is likely, the press conference at 2:30 is likely to be dovish, so it's likely to push back up. But, either side may go. I'm just not going to sit here and predict what the market's going to do with the FOMC. I just know that there are likely not to be a lot of plays there. Secondary, all the long hands are likely, the long weak hands are likely to flush out. Open auction that moves directly into the 88 and push down through to the 37, 75, 72 area before we poke through, come back, consolidate, and find ourselves back in the overnight range and back towards the point of control before the FOMC kicks in. And again, who knows what it'll do then. It'll do something and get the, finish the job at that point. So these are the two main areas. Again, let me express that 22 is key here. 40 above that is key with some intermittent levels. There's 30 beneath there and all that. These stock zones are not just random numbers. 09 is 109, the point of control at 09 and 16.15. These are the areas above. The area below that gets the most attention is the 75. This has been in play for a long time, and of course the 94 is the MC point of control. If we come back to the 94, I'm expecting chop, and then beneath there we start to move to 37.20. 37.20 and make our way to 36.94. Anyway, this was a very long trader bite. The market opens in 2 minutes. I apologize. It is what it is, but there was a lot to cover here. Good luck, and I'll catch you tomorrow. Don't forget, FOMC at 2 p.m. Eastern. Take care.